A head and shoulders reversal pattern forms after an uptrend, and its completion marks a trend reversal. The pattern contains 3 successive peaks, with the middle peak, head, being the highest and the 2 outside peaks, shoulders, being low and roughly equal. The reaction lows of each peak can be connected to form support, or a neckline. As its name implies, the head and shoulders reversal pattern is made up of a left shoulder, a head, a right shoulder, and a neckline. Other parts playing a role in the pattern are volume, the breakout, price target, and support turned resistance. We will look at each part individually. Prior trend. It is important to establish the existence of a prior uptrend for this to be a reversal pattern. Without a prior uptrend to reverse, there cannot be a head and shoulders reversal pattern, or any reversal pattern for that matter. Left shoulder. While in an uptrend, the left shoulder forms a peak that marks the high point of the current trend. After making this peak, a decline ensues to complete the formation of the shoulder. The low of the decline usually remains above the trend line, keeping the uptrend intact. Head. From the low of the left shoulder, an advance begins that exceeds the previous high and marks the top of the head. After peaking, the low of the subsequent decline marks the second point of the neckline. The low of the decline usually breaks the uptrend line, putting the uptrend in jeopardy. Right shoulder. The advance from the low of the head forms the right shoulder. This peak is lower than the head, a lower high, and usually in line with the high of the left shoulder. While symmetry is preferred, sometimes the shoulders can be out of whack. The decline from the peak of the right shoulder should break the neckline. Neckline. The neckline forms by connecting low points 1 and 2. Low point 1 marks the end of the left shoulder and the beginning of the head. Low point 2 marks the end of the head and the beginning of the right shoulder. Depending on the relationship between the 2 low points, the neckline can slope up, slope down, or be horizontal. The slope of the neckline will affect the pattern's degree of bearishness. A downward slope is more bearish than an upward slope. In some cases, multiple low points can be used to form the neckline. Volume. As the head and shoulders pattern unfolds, volume plays an important role in conformation. Volume can be measured as an indicator, OBV, check-in money flow, or simply by analyzing volume levels. Ideally, but not always, volume during the advance of the left shoulder should be higher than during the advance of the head. Together, the decrease in volume and the new high of the head serve as a warning sign. The next warning sign comes when volume increases on the decline from the peak of the head, then decreases during the advance of the right shoulder. Final confirmation comes when volume further increases during the decline of the right shoulder. Neckline break. The head and shoulders pattern is not complete and the uptrend is not reversed until neckline support is broken. Ideally, this should also occur in a convincing manner, with an expansion in volume. Support turned resistance. Once support is broken, it is common for this same support level to turn into resistance. Sometimes, but certainly not always, the price will return to the support break and offer a second chance to sell. Price target. After breaking neckline support, the projected price decline is found by measuring the distance from the neckline to the top of the head. This distance is then subtracted from the neckline to reach a price target. Any price target should serve as a rough guide, and other factors should be considered as well. These factors might include previous support levels, Fibonacci retracements, or long-term moving averages. The head and shoulders pattern is one of the most common reversal formations. It is important to remember that it occurs after an uptrend and usually marks a major trend reversal when complete. While it is preferable that the left and right shoulders be symmetrical, it is not an absolute requirement. They can be different widths as well as different heights. Identification of neckline support and volume conformation on the break can be the most critical factors. The support break indicates a new willingness to sell at lower prices. Lower prices combined with an increase in volume indicate an increase in supply. The combination can be lethal, and sometimes there is no second chance return to the support break. Measuring the expected length of the decline after the breakout can be helpful, but don't count on it for your ultimate target. As the pattern unfolds over time, other aspects of the technical picture are likely to take precedence. Inverse head and shoulders is a reversal pattern that shares many common characteristics with the head and shoulders top, but relies more heavily on volume patterns for conformation. As a major reversal pattern, the head and shoulders bottom forms after a downtrend, with its completion marking a change in trend. The pattern contains 3 successive troughs, with the middle trough, head, being the deepest and the 2 outside troughs, shoulders, being shallower. Ideally, the 2 shoulders would be equal in height and width. The reaction highs in the middle of the pattern can be connected to form resistance, or a neckline. The price action that forms the head and shoulders bottom is roughly the same as that which forms the head and shoulders top, but reversed. The role of volume marks the biggest difference between the two. Generally speaking, volume plays a larger role in bottom formations than top formations. While an increase in volume on the neckline breakout for a head and shoulders top is welcomed, it is absolutely required for a bottom. We will look at each part of the pattern individually. Keeping volume in mind. Prior trend. It is important to establish the existence of a prior downtrend for this to be a reversal pattern. Without a prior downtrend to reverse, there cannot be a head and shoulders bottom formation. Left shoulder. While in a downtrend, the left shoulder forms a trough that marks a new reaction low in the current trend. After forming this trough, an advance ensues to complete the formation of the left shoulder. The high of the advance usually remains below any longer trend line, thus keeping the downtrend intact. Head. From the high of the left shoulder, a decline begins that exceeds the previous low and forms the low point of the head. After making a bottom, the high of the subsequent advance forms the second point of the neckline. The high of the advance sometimes breaks a downtrend line, which calls into question the robustness of the downtrend. Right shoulder. The decline from the high of the head, neckline, begins to form the right shoulder. This low is always higher than the head, and it is usually in line with the low of the left shoulder. While symmetry is preferred, sometimes the shoulders can be out of whack, and the right shoulder will be higher, lower, wider, or narrower. When the advance from the low of the right shoulder breaks the neckline, the head and shoulders bottom reversal is complete. Neckline. The neckline forms by connecting reaction highs 1 and 2. Reaction high 1 marks the end of the left shoulder and the beginning of the head. Reaction high 2 marks the end of the head and the beginning of the right shoulder. Depending on the relationship between the 2 reaction highs, the neckline can slope up, slope down, or be horizontal. The slope of the neckline will affect the pattern's degree of bullishness. An upward slope is more bullish than a downward slope. Volume. While volume plays an important role in the head and shoulders top, it plays a crucial role in the head and shoulders bottom. Without the proper expansion of volume, the validity of any breakout becomes suspect. Volume can be measured as an indicator, OBV, check-in money flow, or simply by analyzing the absolute levels associated with each peak and trough. Volume levels during the first half of the pattern are less important than in the second half. Volume on the decline of the left shoulder is usually pretty heavy and selling pressure quite intense. The intensity of selling can even continue during the decline that forms the low of the head. After this low, subsequent volume patterns should be watched carefully to look for expansion during the advances. The advance from the low of the head should show an increase in volume and/or better indicator readings, e.g., CMF greater than 0 or rise in OBV. After the reaction high forms the second neckline point, the right shoulder's decline should be accompanied with light volume. It is normal to experience profit taking after an advance. Volume analysis helps distinguish between normal profit taking and heavy selling pressure. With light volume on the pullback, indicators like CMF and OBV should remain strong. The most important moment for volume occurs on the advance from the low of the right shoulder. For a breakout to be considered valid, there needs to be an expansion of volume on the advance and during the breakout. Neckline break. The head and shoulders bottom pattern is not complete, and the downtrend is not reversed until neckline resistance is broken. For a head and shoulders bottom, this must occur in a convincing manner. With an expansion of volume, resistance turns support. Once resistance is broken, it is common for this same resistance level to turn into support. Often, the price will return to the resistance break and offer a second chance to buy. Price target. After breaking neckline resistance, the projected advance is found by measuring the distance from the neckline to the bottom of the head. This distance is then added to the neckline to reach a price target. Any price target should serve as a rough guide, and other factors should be considered, as well. These factors might include previous resistance levels, Fibonacci retracements or long-term moving averages.